Hey traders and investors, it's Serge Berge here. Today I want to have a look at how much further the broader market can fall in the near and potentially medium term. So if we look at the market here, what I've done is I have drawn a simple support line dating back to the fall of 2011, which is the last time we really had big meaningful sell-off. And I've done a chart that's called a logarithmic calculation. Okay, so basically it takes into consideration the extremes of the movements and it kind of smoothens everything. Okay, um, so this is a very, very important support line that we're now reaching, and it's above the 200-day moving average. Okay, so we had a low at around 1740 in the S&P on Monday, and we again retested it. Okay, marginal undercut in Wednesday's trading, and we now need to see if we can get some follow through buying. But this is a very important new support line that I am now focusing on. Okay, if we now take the chart of the S&P and kind of zoom in just a little bit more, you'll see that the 200-day moving average is still there. It's now around 1710. Okay, it's no longer at 1700. You have a rising 200-day moving average. It's important that people understand that these lines move. They're not static like everything else in the market as well. Everything's moving. So 1710 now remains the next potential support. But what's more important, if we look at the S&P, even just kind of to give us further confirmation of a potential support, is yesterday we had this candle. Okay, and everyone knows that I focus a lot on candlesticks, not because um, it's not because it's just one thing to look at, but because it actually really gives us a ton of information. Okay, and yesterday we had a so-called doji candle, but I would argue it was also sort of a hammer candle, which has bullish implications. Okay, and basically what this now means is we need to see follow through buying to confirm to us 1740-ish was support to trade against. Okay, what's important to watch here now is a few things. First of all, there are technology stocks that are starting to look a little bit better. So, keeping that in mind, let's look at the QQQs. Okay, NASDAQ 100 ETF. Very similar to the chart I just showed you on the S&P. This chart gave us a long tail yesterday, okay, on the daily time frames. So we now need to see if we can get follow through buying. The QQQs came into the 100-day moving average, which has acted as support since I think early 2012, if I'm not mistaken. Actually, well, yeah, it began starting acting as supported in sorry, early 2013, so early last year. So this is now another thing to focus on, particularly because I'm seeing Nasdaq 100 components, such as Adobe Systems, for example, perking up and looking very, very good. Okay, look at this stock. It's given us some very good support levels over the past few days, continuation buying on Tuesday and again on Wednesday. This is the kind of stock you want to focus on um, if things really start turning around. And I hope this makes sense. Any questions, as always, please ask. Take care.